Hey traders, and welcome to our first video. In this video, you're going to learn when and how to use Fibonacci levels, which levels are actually important and why, how to enter and exit trades using Fibonacci retracements and projections, main mistakes that you should avoid at all costs when drawing Fibonacci levels on your charts. Let's get started. So when you should use Fibonacci retracements? In order to know the answer to this question, we must understand the three different forex market cycles. Let's take a look. So in the downtrend, the market is making lower lows and lower highs. The market is also making impulsive and retracement moves. Because this is a downtrend, we want to be at the right side of the impulsivity and catch the trades at the end of the retracement move. As we can see, we could enter a sell position right after the retracement is over and run the trade to the downside. In an uptrend, the market is making higher highs and higher low. The market is also making impulsive and retracement move, the same as in a downtrend, just in the opposite direction. So if we want to be on the right side of the impulsivity, we want to take the trades at the end of the retracements to run the trade to the upside. So this is first scenario and this is the second scenario. That's how you can capitalize on retracements in an uptrend. So lastly, we have the consolidation phase. There is no direction, there's indecision in the markets. We are waiting for a breakout of this box to either side. Interesting fact, market is in consolidation phase 60 to 70% of the time. So in conclusion, as we can see, we can take the trades in a downtrend because of the strong impulsivity, and we can take advantage at the end of the retracements. In an uptrend is the same thing, just in the opposite direction. We can take the trades at the end of the retracements to potentially run the trade to the upside. In consolidation, there is no trades for us. We just wait for a breakout and the trend to form. So how to use Fibonacci retracements in combination with Japanese candlesticks? Firstly, let's take a look at the uptrend. So firstly, we need to identify the impulsive move. After some bearish candlestick formation, we can anticipate our retracements. In order to trap the price with Fibonacci levels, we need to identify the swing low and the swing high. Once we connect it from the swing low to the swing high, our Fibonacci trap is set. We need to wait and see if price will come to our levels. After some waiting, we see the retracement is potentially over. We can see some weak rejections which confirm the bounce from the 61.8%, which acts like a support. After the bullish engulfing pattern is formed, we can use this as an entry confirmation. Potential entry after the candlestick closure and our stop loss could be below the 78.6 retracements. For the take profit targets, we can use the -27.2 and the -61.8 projections. So now let's take a look at the downtrend. Firstly, we need to identify the impulsive move. After the impulsive move is over, we see some bullish candlesticks in the opposite direction. Now we need to identify the swing high and the swing low points to draw our Fibonacci retracement. As we can see, price is not at any of the important levels. After some waiting, we can see the retracement is potentially over and we get a nice weak rejection at the 78.6 level, with evening star candlestick pattern formation, which could confirm our trade. We cannot enter the trade before the candlestick closure. A potential stop loss could be above the 88.6% retracement because we entered the trade on the 78.6. After some waiting, we could use our Fibonacci projections -27.2 and -61.8% as our potential take profit or exit targets. Now let's take a look at the Fibonacci levels that are actually important for your trading. So firstly, let's take a look at the retracements. They are used for your entries. They act as a support or resistance levels. The 38.2% is used in a very strong trending markets, and in order to be useful, you need a very strong bearish or bullish pressure in your favor. The 50% is also known as a hybrid level and is not an actual Fibonacci number. We personally stay away from it and don't trade it. The 61.8% is the golden ratio. It's a good level for taking trades. Lastly, the 78.6% is the last level. If the 61.8% fails, this is the last level to save the main trend. It is also known as an institutional level. So now let's take a look at the projections. So they are used for exits, but remember, always use them with raw market structure. So first one is the minus 27.2%, a potential take profit 1, second minus 61.8, potential take profit 2, and minus 1, potential take profit 3. Remember, always use them in combination with other confluences on the chart. Always in combination with raw market structure. So what it means, never rely solely on the Fibonacci retracements or projections. So now it's time that we combine everything that we've learned in the real market examples. Let's go. So now when you're on the charts, we want to apply our Fibonacci retracement. In order to do that, you should click on this left toolbar and click on this arrow and select Fib retracement. Paste it on a chart and it would look something like this. Your settings will be something like this. So what we need to do now is put on the right numbers. In order to do that, I will show you our Fibonacci tool. Click on my settings and we'll leave this on so you can take a screenshot or do whatever you like. Okay, so right now we're on the real charts and I will show you how we use Fibonacci retracements. Keep in mind that this is not the only way that you can use them. They can be used in many different ways effectively. Okay, so firstly, as we can see, we are on a 1 hour time frame. In order to make a top-down analysis, we need to start on the higher time frames. So let's start with daily. Firstly, as we can clearly see, right here, the market is bearish. But as we can see also at the bottom, we have a very strong support level, which was actually retested a few times, right? And also here. So what this means, that this gives us a decent chance of potentially taking a reversal trade right here on the retracement with our Fibonacci tool to potentially run it to the upside. So our bias on the daily is bullish. Also, we can see we made a strong move, right? So right now, let's hop on the 4 hour time frame. So what we now need to do is identify market structure on the 4 hour time frame, okay? So let me mark this up. So firstly, as we can see, we are making lower lows and lower highs, okay? So lower low, lower high. Right here, we made another lower low and another lower high. What we can now see that this one, the last one, didn't go below the previous lower low, right? And this one didn't go above the previous lower high. So what this means, that we are kind of stuck in this area, right? But this doesn't mean that we cannot capitalize and take advantage of it. So now what we can identify, a very clean trend line to the downside from this week to this week. And if you connect it, right? So we could identify this as a potential sell zone, right? On this trend line. But once we broke it, we can potentially take a retracement right here to run the trade to the upside. In order to do that, we need to hop on the 1 hour time frame. So as we can see on the 1 hour time frame, we are clearly bullish, right? The market structure is clearly bullish. So we are making higher highs and we are making higher lows, okay? Right now, we made an impulsive move from this previous higher low to here, so we made a higher high. So we are on the 1 hour time frame, we are in an uptrend, right? So something like this. We are cycling to the upside. Also, what we have to keep in mind that we are bouncing here from a very strong zone on the daily time frame, right? And as we noticed, if you go back to the 4 hour time frame, 4 hour time frame market structure is still not bullish, right? We need to go above the previous lower high, okay? Because this is trading a reversal from the daily time frame, we should not expect that every time frame will be bullish, because if they go that the price is fractal and we will firstly see a 1 hour market structure shift and then 4 hour and then the daily, okay? So in order to take advantage of a Fibonacci retracement, we need to make some traps, okay? So firstly, let's identify how we would draw our Fibonacci retracement tool. So let's zoom out a little bit. As we can see, we have our higher low and our higher high. That's all we need, right? So let's identify this as a swing low. Okay, swing low is here, and this is our swing high. Keep in mind that this is 1 hour time frame, okay? Swing high. So we can grab our Fibonacci tool and connect it from the swing low to the swing high, okay, and extend it a little bit to the right, just like this. So let's delete this so the chart is going to be more clear. Okay, from the swing low to the swing high, this is kind of a consolidation zone, and from here to here there was not a real impulsive move, so we want to draw our Fibonacci retracement for the real impulsive move which market respects. Okay, so right now we need to identify what's going on. So as we can clearly see, we have the 38.2, 61.8 and 78.6 levels. So let's add the 50 level also. So what we've learned before, that we want to take the trades from 61.8 or the 78.6. All the levels before, the 38.2 and the 50, they are traps which institutions want you to get in the trade so they can grab your liquidity and run the trade to the upside potentially from these two levels, so 61.8 and 78.6. Okay, so right now we need to identify that we want to take the trades from these two levels, right? But of course we need more confirmation. So firstly, as we can see, it's this small, this is a 30 or 1 hour small resistance area which could potentially be retested, and we could use it as confluence for our trade idea. Also what we can see is we have a trend line from the bottom, right? If we connect it, okay, so right here this could be our area of interest, okay, to potentially grab a trade and run it to the upside. Okay, so let's go candle by candle and let's see what happens. So as we can see, price is retracing to the downside. We rejected the 38.2, the level where we don't want to take the trades, right? So potentially, just to give you a perspective, you could potentially be in the trade right here, right? And you could be trapped and your stop loss would be hit just like this, right? So that's the danger of trading the 38.2 and the 50% retracement, because you always have a chance that price will make a deeper retracement to one of these two levels where we want to take the trade and then go to the upside. So it basically technically lose two trades before a potential winner, right? And also keep in mind that this is not a 100% winner, so you could lose even more, right? So you would lose one trade here, and if we take a look, we're bouncing now from the 50, right? We need some rejections to potentially consider some buys. Okay, so as we can see, potentially if you'd be greedy and want to enter on the retest of this trend line, you could enter another trade right here, right? Stop loss below the wick. Okay, and let's see what happens. Yeah, so you would be stopped out again. Okay, so this is the danger. I just wanted to point this out. Also, one more time, keep in mind that this is not the only way to trade, but this is how we trade and how we find Fibonacci retracements to act great and be very respected. Okay, so this right now is interesting. Why? Because we are bouncing from a 61.8 retracements where we wanted to, and what we have in common also, from the bottom we have this actually fourth touch right here. And also, one more time, let's take a look at the 4-hour time frame just to see what happens. So let's go to 4 hour, and as you can clearly see, this is a strong trend line. So let me actually mark it properly. So one touch, two touch, we had a breakout right here, and potentially we want to catch a retracements on this area of interest right here. This is where we made a wick to potentially run it to the upside, right? Just wanted to show you this idea, what we're looking for once again. So let's go back and rewind where we were before. Okay, so we have what we wanted. We made a beautiful wick retest on the 61.8 level. We also retested this yellow resistance line and our trend line. So we have four confluences with Fibonacci level, which confirm our trade idea. So right now we are good to enter the trade, but firstly we want to wait for bullish candlestick to show us that this is respected, right? And so we can take the trade to the upside. We don't want to blindly just enter on the rejection, right? We always need some bullish pressure in this case to confirm the trade. So let's go candle by candle and let's see what happens. Okay, so we made another retest. This is even stronger, so our confirmation is even stronger after the week retest, and we could potentially enter this trade maybe even on the 30-minute time frame, right? once we see some bullish pressure taking these bearish candlesticks. So actually, let's go on the 30-minute chart. So on the 30-minute chart is the same thing. Let me zoom out. It's the same chart, just on the 30-minute, right? Let's get rid of these arrows so it's gonna be more clean. Okay, so right now for entry, right, we want to take out at least these bearish candlesticks, right? So maybe in this area right here, we could enter the trade so we are more safe and have a higher probability. So let's see what happens. Okay, perfect. So we would enter the trade right on the 30-minute candlestick closure, right? And our stop loss could be below the wick, right? So this will be our trade, and let's take a look of how we would set our projections. So for that, let's hop on the 1 hour time frame. So 1 hour candlestick closure would be here. That's why we hop on the 30-minute, right? And enter here, right? So if we would have waited for the 1 hour candlestick closure, we could not take the trade, because if we would take the trade here, our risk to reward to a double top wouldn't make sense, right? This is the beautiful thing about the lower time frame analysis. If you're going from the daily to 30-minute, right, to execute the trade, you can get this type of sniper entries, and your risk to reward ratios could be good, and probability could also be high because you're trading from the deeper retracements. Okay, so right now our stop loss and entry is identified. So let's take a look at where we would exit the trade and where we would take some profits off the table, right? So in order to do that, of course, we want to go on the higher time frames. Okay, so let's erase some of this stuff so it's going to be a little more clean. Okay, perfect. So on the 4 hour time frame, we want to combine our projections, so this one and this one, right, with market structure. You don't only want to take partial profits off the table on the projections blindly, but you need to have some sort of confirmation to go with your analysis, right? So let's identify it. So of course, first take profit or exit would be at the double bottom, right? No matter the time frame, right here, okay? And after that, we personally take some partial profits off the table and set our stop loss to break even, okay? So first one, and then let's take a look at the minus 27.2. Let's zoom out a little bit. And as we can see, market structure, we have some weak rejections here. And if you scroll a little bit more, we can see a beautiful weak rejection, and area of interest is right on the minus 27. So this could be a great take profit too, right? To take some partial profits off the table. And let's take a look at the last level at the minus 61.8. And we clearly can see that the price is respecting this area, left a nice 4 hour wicks right here, right? So this makes sense to take some more profits off the table. So we can now potentially extend our target a little more, right? And we want to monetize this trade on the 1 hour time frame, right? So we have more information. So let me go over the idea real quick. So at the bottom, as we said, we have a strong daily support, right? Which was retested 4 times. We made a strong impulsive push and we broke out of this trend line and potentially made a retracement on this 61.8 with strong confluence. We have a trend line also, right? And this support retest, okay? So that's the idea. So let's hop back on the 1 hour time frame and see how we monitor our trade. So let's go candle by candle and see what happens. So I'm gonna show you how we would monitor this trade, but of course, as I said many times, this is not the only way that is correct and that works, right? So let's go candle by candle. Okay, so let's see what happens. Okay, so we get a strong bullish move, right? This would be basically 2-to-1 risk to reward, right? And of course, what you want to do in this case, you want to take some profits off the table. What we personally like to do is take 25 or 50% of the table, right? This is of course trader's choice. And move our stop loss to break even so we can be safe. So let's go on. We get a strong bearish candlestick, but our stop loss is at break even here, right? So we don't worry about it. This is a winning trade, a risk-free trade already, so we are not stressed. Let's go candle by candle and see what happens next. Okay, so we got a really strong impulsive push to the upside. So of course we want to take another 50 or 60% of the table, right? Because at this point, if you have a 3-to-1 risk to reward, and we don't want to be greedy, right? We want to take risks off the table. So for example, you could be 50-60% of the table here and 25% here, right? So our last take profit would be at this -6 to 1.8. So let's see what happens. Okay, and we crushed it, right? So this could be your take profit number 3, right? And you could be all out of the trade, right? This is how we like to monitor our trades. Of course, keep in mind, guys, this is not going to happen every time, right? I just picked a beautiful example to show you what I mean and how you can take advantage of it. So let's hop back on the 4-hour time frame and see what happens. So to keep everything in perspective, I will go over the trade once again. Okay, so firstly, on the 4-hour time frame, as we see, we broke it out of this trend line. We made a retest on the -61.8%, not minus, just 61.8%. As a confluence, we had this trend line at the bottom on the 1-hour time frame, and this yellow resistance retest, right? So this is 3 confluences in our favor, and we combine that with Fibonacci retracement. So my point is here that you're not going to make money just by drawing Fibonacci retracements on the chart blindly. You will always need some sort of confirmation, right? And you need to take advantage of the market cycle and do a top-down analysis. So all the time frame has to agree and be in your favor to make Fibonacci retracements and projections work. So lastly, let's take a look at the main mistakes that you should avoid when drawing Fibonacci retracements. So first one, be very careful around the 23.6, 38.2 and the 50% retracements. This doesn't mean that you cannot take the trades from this level, but you will have a much higher percentage chance of winning the trade if you will stick to the 61.8 or the 78.6 deeper retracements. Secondly, use them only in trending markets. Ignore the consolidation phase at all costs. Lastly, always use them in combination with other confluences on the chart. Never ever rely solely on the Fibonacci retracements. You want to combine them with technical analysis such as trend lines, EMAs, support and resistance, and impulsivity has to be in your favor on all time frames. So we hope that you found this video helpful and you gained some clarity about drawing Fibonacci retracements and projections. So we are planning to release a lot more content in the upcoming days, so feel free to subscribe to our channel. Happy trading and take care, guys.